Good evening, all of you. Am I audible? Okay. It is an honor to be here, and thanks, Bhushan sir, for inviting me. The world has been fairly turbulent starting 2020s. We saw COVID, we saw 2022, but India seems to be fairly stable. Are we immune? How many of you remember 2008? I can assure you every investor remembers 2008. We all thought we are immune. And humans have a weakness. We have very poor memory. 1920, when the Spanish flu happened, there is a background music, this can stop? So 1920, when the Spanish flu happened, it led to a lot of disasters. I don't know how many of you know that the genesis of Second World War started with the policies of United States of America Federal Reserve, effective 1929. There have been a lot of comparisons being made of 2022 high inflationary environment with 1970s. But I remember vividly in July of 2021, when a similar presentation for a bear market product in anticipation I gave in Middle East with a projection of 4.5% yield. And I do remember, Bhushan sir, 15 months back, yes, through a Zoom call, I don't know if some of them were there, right, where I did speak about what the world's going to face. To my horror, it happened. Sometimes it's bad to predict correctly, especially when things happen not in a great manner. So today what I'm going to do, I'm going to talk about our worldview of 2020s, what we see happening by 2045, 2050. Is it important? Yes, it is important because it has implication on financial wealth of each and every investor on this planet. The world as you see today is about to change. That change has already started. I'm going to talk about that and why that is so. What's going to happen in the Western context, the implication, and hence the investment strategies need to get changed or at least refined. In my opinion, the next 10 years will be about wealth preservation rather than being flamboyant about significant wealth creation, especially in the Western context. To start with, a little background about us. I am based in Singapore, we are headquartered in Singapore. As we speak, we have offices in Bahrain, Dubai, Brunei, Central Asia, Mongolia, India. In India, we have offices in Delhi, Mumbai and Trivandrum. We have investors from 28 countries as we speak. Three parts of our business. One is the fund management side. Today I am going to also spend maybe 4-5 minutes in the end about our absolute return fund because it has done extremely well last year where we paid quarterly dividends back to global investors, dividends, dollar dividends of 10% in 2022. Dividends comes from profits, right? That's an important point. And apart from that, we have a consulting business. Our forte has been primarily on change management because of our expertise in buyouts. We have been controlling shareholders in many countries. In all funds have been put together over last 22 years, 70 plus investments, $2 billion money paid back to investors, double-digit dollar return, 150,000 employees in all companies we have sold. I don't know how many of you know, when I was with Bearings, we bought something called BFL Software. Any of you remember the code BFL Software? It was a loss-making company. Then we got Jerry Rao, merged BFL Software and Emphasis, incubated MSource, Pune, right? Merged the three, sold it to EDS. It's called Emphasis Limited today and it's a Blackstone company. We also invested in Muthoot. It was unlisted when we invested. A lot of people lost money in 2008 crash, especially in financial services. We made a lot of money because we thought gold prices will go up. And it's very rare to go and put $50 million in two competing companies. So we decided to put 50 million in Muthoot and 50 million in Manappuram. We thought both will do well and that happened. Then we also invested 75 million along with government of Singapore in Marico, the Mariwala's company in 2008-9. So India has been very kind to us in terms of returns. But today my agenda is not about talking specifically on products. Given the audience today, I want to emphasize on what's happening on the planet and the implication on investments at large, because I think it's going to impact everybody. Nobody is immune. COVID taught us, we thought in the first wave that we have more immunity. I don't know how many of you have read. Unfortunately, Asians and Indians have a gene which made us more susceptible to COVID. Are you aware? And hence Delta strain impacted us more. I remember Ranjit and I, my colleague, we were in Hong Kong on 23rd Jan 2020 when Wuhan lockdown happened. And we were panicking because I know how China behaves. There was a long queue at the airport, 1 kilometer long, right? And after that, I did a call with my entire management team, all investee companies in India, asked them to start getting ready for cost cutting. People laughed and we were right. So I think it's very important to understand the global implication, and that's the agenda for today. On the team side, we are 50 people strong. For a fund management company, 50 is a large number, but I think I take a lot of pride in saying zero attrition at principal or above for the last 10 years at a fund level. Bhushan sir is the same jokers who keep talking to you every time, right? So that's an important thing, stability of the team. On the advisory council, we have representation from many continents. Mr. Wiles, based in London. He is a renowned banker, has worked in New York and London, and he is basically also working with a lot of family offices in the Nordic belt on change management. Then we have Mr. Moez Ali Bhai in East Africa. He is the chairman of Aga Khan Healthcare and Aga Khan University there. Mr. Gandhi is based actually in Pune. He is done almost 320 IPOs and capital issues. Currently is on board of Sundaram Clayton, the holding company of TVS Group, Kirloskar, NCL. He was on board of Dr. Reddy's from 87 to 2002. We have had no change at a board level since inception. Zero change in any board member. I think that's an important way to know governance standards of a company, I guess. And Mr. Satyamurthy, retired Deputy Comptroller Auditor General, till recently was working with EU, is also the first honorary CEO of the Anti-Corruption Academy. So that's on the team side. Let me straight away jump to the topic of today. Before I start about talking the future, it's important to talk about the past. No, I'm not just going to talk about 2022. History was very boring, right? So I'm going to talk a lot about history today. I'm going to talk about 1929. And there's a reason for that. Turbulence. Turbulence doesn't mean bear market or bull market. Turbulence means volatile market. It started with COVID in 2020, continued in 2022. In our opinion, 15-20 minutes from now, US inflation data is about to come. Let's see whether it goes up 60 points or goes down 60 points, right? So turbulence is here to stay. And the reason it started 2009 with printing of money. All of you know that. What's the big deal about it? The big deal about it is that it just got accentuated in COVID pandemic. Imagine the Indian government decides to print $3.5 trillion equivalent in rupees. I repeat, imagine if Reserve Bank of India decides to print $3.5 trillion, roughly GDP of India, right? What do you think will be dollar rupee? Any guesses? I'm quite serious about it. From 82 to a dollar, where do you see it going to? 900, 160, 200? Bizarre, right? All of you who have studied economics know that it's called Fisher effect in general, because inflation will go up, quantitative easing. There is a lady by name of Truss. Have you heard her name? Because when she lost the job, Rishi Sunak became the PM, right? I pity her because she tried something. She tried to say, or rather said something, which United States did for last 10 years. We are very harsh as a society, especially with ladies. And I mean it. She actually said what US did. US printed money almost as much as the quantum of float actually doubled, right? Literally there was a printing press. And what happened to US dollar? It went up. What do you call it? I asked a lot of economics, who understand economic theory, what do you think, what kind of theory is this? I'll tell you what it is. It's called neck economy. The US has a hand with on their neck. Why is this important? Because by 2045, Asia will be 50% of the world GDP. By 2045, Asia. Okay, all of us, when we go to US, whether you are Chinese or Indians or Indonesians, we are all aliens. We are all in the same line. Have you been to US? When you go and enter, you know you are in an alien line, right? That starts how racism starts from there, right? You are in an alien line, on a lighter note. But I mean it. Why is this important? Because it has implication on wealth. The Renaissance of 17th century, which gave power to Europe, and they had colonies, Dutch colonies, Portuguese colonies, English colonies, India suffered. The Renaissance was industrial revolution. A lot of people say they stole gunpowder. I beg to differ. There was nothing called IP at that time. One of the 10 commandments we have, if competition is doing well and it's not IP, just copy it. Experience curve effect says the second player makes more money than the first player. It's not eBay. It's Amazon, and it's not Amazon, it's Alibaba, right? Very important. The Renaissance of 21st century is technology. Today, technology has reduced that gap, and hence the power is shifting to Asia. A lot of people say that companies are moving out of China, manufacturing firms are moving out of China. Can you tell me where they are going to? Right? Vietnam, Asia, India, Asia, right? Indonesia, Thailand, Asia. Where is the chip industry based? Taiwan, Asia. Where is oil? Asia, right? And Russia's again aligned. Very important implication on financial context. Very important, because if you have NR clients as well, you need to tell them that. Because 2022 was one of those unique, bizarre years where people lost money in a non-recessionary year. Tell me last when it happened that people lost money in a non-recessionary year. You are all linked to the industry. I learn from you actually, because when we talk to people like you actually across the world, we have network partners and distributors in 28 countries. We learn a lot locally. 2008 recession, 2020 recession, 97, 2001, 87, 91. We can go on 80. Like 87 was Black Monday, 91 Gulf War, 97 Tiger Economy Crisis, 2001 dot-com, 8 subprime, 13 Greece, 20 COVID. Every time there was a recession. Was there any recession in 22? If you have international clients, and thanks to RBI, that leverage is not allowed in India. Otherwise, I have clients, I'm not kidding, who wept. If you have NR clients, you please ask. 40% to 70% erosion in wealth because of leverage and margin calls. Anybody who is below 55 years of age in this room, I am 45, anybody who is below 55 years of age in this room hasn't seen a bear market in bonds. With all due respect to experience, I have 23 years experience. I am sure a lot of you, I can see a lot of wisdom here. If you, you are less than 55, you haven't seen a bear market in bond market, because the bull market in bond market started in 1981. Go to investing.com, click on 10-year US, right, yield, and just look at that chart, maximum. Click on max. It's just a channel like this. It's shocking. It's a 40-year bull market which just ended last year. So financial implication is what I'm going to talk about. I'm going to show you some charts. I just wanted to set the context before I take you through individual slides. The reason for that is that there is a significant saving rate recession in Western economies. How do you define recession? 2 quarters of negative growth. That's for GDP. What about income recession? What about savings? If savings collapse, what happens? Do you know United States saving rate? Any idea? I'm not talking about credit card usage. That's okay. That's normal. That helps actually the GDP growth, right? Savings rate of US, anybody? Any guess?
1.5.
Sorry?
1.5.
Very close. Thank you, ma'am. It's 2.7. That's it. India? Sorry? 20 plus? 30 plus? Around 25, 30 swings between that. 3.5 trillion, we save 800 billion. United States have 25 trillion, saves 600 billion. Saves less than India. Any idea about China's GDP? 20 trillion. Any idea about saving rate? 40%. $8 trillion saving annually. Where are the IPs shifting? 2018 and 19, maximum IPs filed by Alibaba. The reason why this is important is because the flutter of the cat, which is US in this case, which is inside a room and is being whipped, because they are going to lose out, right, on power. Money defines power, population defines consumerism, both are shifting to Asia. So this 2045 story can get delayed by 5 years by pricking Taiwan, sending Nancy Pelosi, but there is a design which is there which we all need to understand. It's extremely important because it has financial implication, because 3% of GDP, world GDP is India, right? Any idea what proportion of world wealth is invested in India? Why are we talking about FIs every day on CNBC? I just don't understand. Your NPS scheme is the biggest contributor. You have a very strong tailwind. We have a very strong tailwind, NPS scheme. 0.25% of global wealth is invested into India. That's it. There is a very serious financial implication on this, because chances are the money, global money which will flow into Asia will be humongous. It's going to be similar. 2020s are going to behave similar to 2003 to 2007. My theme is sell US, buy the world. That's my theme. Of course, India, but sell US, buy the world, and I'm going to prove it through data today. But this is extremely important to understand the context, because 90% of the global products and 99% of private banks, European banks, US banks, UK banks, UK is no longer part of you, right? Why I'm saying these three? Because these three countries and continents and zones put together are 50% of world GDP at 100 trillion. Fast forward 2045, 2050 at 150 trillion. 50% is Asia, that's 75 trillion, with 30% saving rate, 25 trillion, right? And West with 25-30% of GDP is just 4-5 trillion saving rate. Please tell me, the wars are going to reduce in next 15-20 years or increase? Short selling of large stocks in Asia is going to increase or reduce? Something to do with A. A for Alibaba, they screwed it, and A for Adani, both. It's a very important implication, because I don't know if how many of you know the biggest fraud on the planet. Any guesses? Which is not yet, it's unearthed. It's not yet come out. The pension fund industry in United Kingdom. It's the biggest fraud on the planet right now. You know why? If you buy a AAA rated bond and the bond price falls, should you panic? Only if you are levered. Otherwise, hold till maturity. What's the big deal? You only have created a duration risk. See, if you believe that the bond's not going to fail, it's AAA rated, why there is a panic? You just hold to maturity. You've just created an illiquidity premium, risk. But UK pension fund was levered. Pension fund is not supposed to be levered. UK pension fund is levered, and hence when the bond yield changed, right, the price fell, there was margin calls, and that made the Prime Minister resign. It's an extremely important point to understand. the global implication. So, contextually, lot of things are changing in 20s and 30s, and it's going to have massive implication on all of us, and hence our investment strategies ought to get tuned to global dynamics. Well, all these contributed to the mess, and that's why we were quite clear in 2021 that we are heading towards a high inflationary environment, because each of these issues, disruption in supply chain, any idea when it happened last? 1948. In 1948, post World War II, there was pent up demand, but there was mistrust across nations exactly like today, which led to supply shock, hyperinflation, but the banks acted smart. Central bank is US, don't forget. They have been number one economy. Number two has been changing from Germany to UK to Japan, China, India will be someday, right? They did not increase interest rates. They just changed money supply. But what are they doing right now? Increasing interest rates, and that's very similar to 1929, flashback 100 years. In 1929, 1920s, post-COVID, there was serious pent-up demand. Dow Jones went up 500%. The Dow Jones of today is NASDAQ. Why were people surprised when NASDAQ went up stocks went up 5-6 times, right? Tech stocks. Very similar it happened in 1920s. History repeated. Post that, they were not happy with this. Whatever they did led to Great Depression, but that was the genesis of protectionism, which led to World War II. The issue for World War II started 6 years before the war, and that issue, in my opinion, started, no, not Ukraine, Crimea. 4-5 years back. If any of you read about what Russia is doing, they actually meant it. And don't be surprised if anything called a mini nuclear attack also happens, because the guy means it. But long story short, this led to a significant challenge, because the pace at which the interest rates were increased were unprecedented. By the way, this time it's been far faster than that. Is it 7? Inflation data would have come, right? The pace was far higher. The money supply, any idea how much money is being withdrawn by United States every month? You all know 8 times money multiplier. $90 billion is being withdrawn by US every month. $90 billion. Please understand the implication. $90 billion. Why dollar has been appreciating is because of artificial demand. $90 billion withdrawal. We are bearish on US dollar from here on, second half point of view. And then importantly, Dow Jones crashed 90%, but this was intended, because they were not happy about Dow Jones going up. Mind you, in 1920s, hardly many people were trading, but still they did what they did, and this led to whatever you see. Long story short, destruction of aggregate demand. I was in Brunei, something similar as a session, and by end of day, we got invited by the finance minister, and they asked us to start an office there, which we did. But I asked them, what's the objective of a state? Let's say India. If you are the one running the country, what will be your objective? Welfare? How many of you do you think can even attempt to try and have policies to increase unemployment rate? You should throw stones on me when I say that, right? But that's the stated policy of United States Federal Reserve. Please read the details. In every communication of US Fed in the last 12 to 15 months, they are saying that US unemployment rate is too low, it ought to go up. If any of you want to ask me, Mohit, tell me one parameter instead of all this complexity which I need to track to know which way the world is heading, I'll say, please track only the US unemployment rate. It's still not going up. It is still not going up. The stated goal of United States Federal Reserve is to increase unemployment. Please read the minutes of Fed. Please read when they make comments, and that's bizarre, but that's what they are. So the stated goal is increasing unemployment, so the rates will keep increasing. In our view, terminal rate, we said 5.1%, and I was shocked in November they came out with 5.1. And if inflation continues to be higher, it could be higher than 5.1. So, long story short, for a simple issue of stock market speculation, they came out with a bizarre solution of increasing rates exponentially and reduction of money supply, which led to one of the most complex recessions called Great Depression of all times. Important to understand because West is going through a very similar crisis as we speak. Japan has deflation, right, historically? Any guesses on current inflation in Japan? It's at 40-year high. The latest data of last month, 40-year high, 4.3% odd, 4% plus. For Japan, it's very high. Salary hikes by a lot of MNCs in Japan, average hike right now is 50%, 50. It's a manufacturing hub. What happens to input costs? Why is PPI again going up? Important to understand. Producer price index, that feeds into CPI, right? First PPI goes up, then CPI goes up. Mr. Uday Kotak just came out with a tweet last week, turbulence, he used the word. We were all smiling. Just check, turbulence. There's expected to be turbulence. So let's look at current scenario. Well, Spanish flu, similar happened 2020, Great Depression, Ukraine conflict, very similar, 100 years back, very similar situation. Humans haven't learned. We are doing the same mistakes, increasing rates. In my opinion, rates should not be increased at all. How do you manage a supply shock by increasing rates? You can't. Just nationalize oil companies. In UK, I was a speaker recently at a forum a few months back. They asked me, what do you think can be the way out? I said, just nationalize oil companies. Germany did that after that. You just nationalize oil companies. India has done that for a while. And we were taught and that, that's not right. And now Germany does that. Caps on crude prices. Is that not what Indian marketing firms are made to do? Who's learning from where? I don't know. Right? But capping is being done now in West. The biggest issue of today, this is extremely important to understand. We are going through a great mass resignation cycle on the planet. It's the largest mass resignation cycle that is on. I don't know if you know about the firms here where attrition is high or not, but resignation cycle is massive globally right now. And why is that important? Because unemployment rate is linked to labor. The labor shortage right now is massive, not just because of aging population, which was always there, but on and above that, COVID related health concerns, that is added to the fire. The labor has got shrunk because of it. Most importantly, immigration restrictions. A lot of countries, including Singapore, the number of employment passes reduced dramatically. We are at 2012-13 level, literally. Even on top of it, vaccines, mandatory vaccines. US has hardly 73-74% vaccination rate. People don't want to get vaccine. So, a lot of people, while they are competent to work, they are ineligible to work. And on top of it, doles being given by Western society. I call it the disincentivization to work. All of that is leading to a massive labor shortage in West, a very serious implication. Now, persistency of inflation, developing countries always knew it. We have always seen it. However, last time Western countries saw was in 1970s. Those who were in 40s at that point of time are in 90s, so they are irrelevant right now. Effectively, 2 generations did not see high inflation. Very, very important point. And 3 wars happening currently on the planet. Of course, it has subsided. COVID war. Why COVID war I say? Because still recently China was having a zero COVID policy. We went long on China 3 months back and people asked us, why would you do that? I said, very simple. Any country which removed a lockdown, average return of the index is 33% to 75%. I mean, the spread, average return is 50% odd and spread is 33 to 75. What makes you think Chinese stocks will not do that? That's been the return whenever lockdown was removed. But there is a cold war on the planet. China, US? No. Europe, US. What am I talking, right? Anti-Inflation Act of United States of America. Have you heard about Anti-Inflation Act? Please read. You know which industry it impacts the most? European automakers. It's a disaster for European automakers. The monarch of United States of America, Mr. Biden, it's a democracy. Let me say why I said monarch. Because I am an electronics engineer and I've done Verilog hardware design, logic, chip designing. And then I did my MBA in recession 2000. The gentleman got up one day 3 months back and said, any American citizen who's working in chip industry in China, resign. If you don't resign, you lose your citizenship. Can anybody dare to say that in India? I studied, took loan, worked hard, did my engineering, got a job, earning well, and I'm thrown out because the monarch made a comment. He got up from the wrong side of the bed. That's democracy. China reacted. China doesn't react. I stay in Singapore, I know how they think. They don't react overnight. They take their time. We discussed, I said wait for 10 days. You see what they will do. You know what they did after that? Apple fell from 175 to 130. You know why? Because the city which has the largest factory of Apple, the vendor, they locked down the entire city after 10 days. They just locked it down. Supply shock is a war. It ought to be understood. Please go and read. They locked down the city exactly 8-10 days after Biden made this comment. So contextually, that war is going to only increase because power, population and savings is shifting to Asia, including crude, including oil. UAE and Saudi didn't align with US. Saudi went and cut production. They aligned with Russia on that. So it's very weird. It's very weird. There's something shifting on the planet. Please go and Google how many countries want to join BRICS. Many. The big ones want to join BRICS. So this implication is very important to understand your portfolios and your clients' portfolios. Okay, interest rates have gone up. What's the big deal about it? Let me tell you the big deal about it. Modern history. Have you ever heard 284 hikes across the world in one single year? Look at the implications. See, we think very small. Let's talk about 284 hikes, more than one per business day on the planet in 2022. How's that? Still we didn't have a recession. That's why I'm saying money being lost in almost every asset class globally in a non-recessionary year is unheard of. Quantitative tightening. We spoke about it in 21, but let me tell you the implication of this and why I believe US will continue to suffer. You will have technical bounces, that's okay. Why? Not because of inflation, that's balanced. There could be deflation by H2, by the way, because of base effect. Possible in US, deflation in H2, and then it will bounce again. The important implication is this. In our understanding, S&P 500 will have earning contraction in 2023 to the extent of 10-15%, because when Indian rupee depreciates, we'll go and buy technology and pharma. Do we agree? Then what makes us think that when US dollar appreciates, all their companies which have global business majorly, they shouldn't have translation loss? How many articles are being written about US companies' translation loss? Please tell me. Why is that not being written? It's a big issue. When US dollar will appreciate, where is the income coming for majority of S&P 500 companies? It's coming from outside US. And if my dollar becomes, its strength goes up, what happens to translation loss on my earnings? We anticipate $195 to $200 of earning of S&P 500. Last 140 years, average price to earning of United States of America's S&P 500 is 15. I'm not saying it's going to 3,000, but that's the number. The average price to earning, but remember bear markets have worse than that and bull markets have better than that. Markets can continue to be in extended over optimism with a PE of 25 for a few years, or extended pessimism for a few years, but reality is the average PE for 140 years was 15 and earning expectation should be around sub 200, just as a point. And the bigger implication is, as I said, saving rate has dipped dramatically. Of course, one of those unique years where both bonds and stocks fell. 2008, we had a bond rally, but last year, disaster. Why it's important? One of my big agendas today is to see if you can get more share of wallet of your NR clients. See, you have a AUM. Shifting AUM, what's the big deal about it? As a fiduciary, you have to do it. If you feel that some product's not going to make money, you shift it to some other product which makes money because you are representing your client's interest. But what about increasing your AUM with NR clients or international clients? That's one of my pet topics today, because all of us, all of you have international access. You have either people whose family members are abroad, and mark my words, because of leverage, a lot of them, even if they don't acknowledge, they would have had margin calls and lost a lot of money. And that is where I think, and most of them would have in many cases invested in FANG stocks, right? A lot of people ask me, what's your view on venture capital, adventure capital, right? Let me answer that. What makes you think that a 5, 10, 20, $50 million investment can survive? Because Amazon, which was 3 trillion market cap, lost $800 billion of market cap. The total loss of market cap of all FANG stocks is $5 trillion, more than GDP of India. That's the wealth destruction of last year. You know why tech companies are sacking people? Because seniors have lost money on their ESOPs. So it's post-purchase dissonance. Business hasn't collapsed. Earnings are still growing. Actually, this is a reality. It's psychological. Because when, Meta, I was in Bahrain, somebody asked, what are you buying? I said, Meta at 90. It's recorded. I said, why? Because they are sacking people. Perception, price will go up. It doubled actually. I didn't anticipate that. So basically, there is a serious recession in earnings and savings. A very, very serious implication. Let's cut through the noise and let's understand. Has the world order changed? In my opinion, in our opinion, humble opinion, answer is yes. And that's why turbulence is here to stay. Asia is going to be actually powerful and bigger. One of the gentlemen in one forum in London, when I was a speaker just a few months back, he actually spoke about, one or two prime ministers, including Indian prime minister, and was not very kind about communication. I said, forget that. I said, first thing you need to do is come to Singapore and learn how to manage your tube. If any of you have visited London, the quantum of garbage which is lying in a tube there is simply pathetic. Basically, quality of quality determines what's going to happen. Take any 5 politicians of West, and I mean it, forget your political inclination for a minute. Let's talk finance. Take 5, Trump, Biden, Johnson, Theresa, take any other, take 5, and take 5 from Asia. I don't know if any of you know Indonesian Prime Minister, done very well for Indonesia. They are allowed to have only 2 terms. Population is asking that please change that policy, right? Singapore, take UAE. Okay, I'm not saying India, right? I'm just trying to say outside. But point is, if you compare, it's always a reflection of what's going to happen in future. And Asia is becoming bigger. Some of the cities, developed cities in Asia are far cleaner, infrastructure is far better, investments moving up, saving rate is moving up, IPs are in Asia, and hence your investment strategy need to start getting aligned. It's not necessary that when your clients invest in UK properties, that's the best thing to happen. Maybe a Singapore property or some other Australian property could do equally better or maybe better. And this entire story is driven by the savings rate, in my opinion, and that's not easy to change. Once savings rate fall dramatically, it's a macro trend. It takes a lot of effort to take it out. US saving rate is at 17-year low. 17-year low, right? And hence I'm afraid I'm still bearish on United States. It's not enough. The damage is not enough. Implication, in our view, the bulwark status of US is likely to get shattered. Let me give you some very refined data points. Very refined data points. And I'm still selling a dollar product. I'll tell you why. I'm not selling US, I'm selling a dollar. Dollar or pound. First and foremost, GDP of US is 24% of world GDP. But even after market fall, the market capitalization of United States is 46%. Berkshire Hathaway, one of the favorites framework is what? market cap to GDP. Please look at the market cap to GDP of United States of America. Even after the fall, it is pathetically high. If you would have invested $100 in United States stocks in March of 2008, it is still worth, I think if this data is 1 month old, it should be higher now because market went up in last 1 month in US as well. It is $288 still. However, had you invested $100 in ex-US, it's down to 94. It's a 3 sigma deviation event. All 3 sigma deviation events correct. Hyperbolas, they correct. The outperformance of US stocks was fueled by declining interest rate regime resulting in lower cost of capital. All of you understand basic finance. Cost of capital is a numerator or denominator. When you calculate valuation, niche hai, denominator, right? So if denominator goes up, what happens to valuation? It falls. I am going to show you a chart. I am going to show you a chart of something very important on the planet which has changed. The negative yielding era has ended. There was $18 trillion of negative yielding bonds on this planet. You go and put money in German bank, you have to pay for that. You put money in Japan, you have to pay for that, right? So what were US companies doing? They were driving buybacks by taking cheaper capital. Any guesses how much buyback happened in US in the last few years, cumulative? $7 trillion. $7 trillion of buyback. That tailwind is over because negative yielding interest rate, this negative yielding bond is actually zero. $18 trillion zoop moved out. That's not a joke. So what will happen? We will continue to have serious buybacks now? Only those companies which have real cash on their balance sheet can afford to do that. So Tesla fell. Right? Implication. Very important implication. The rest of the world versus US equity. US versus rest of the world. Look at the deviation. This has been growing consistently post quantitative easing. That's why I said the change happened in 2009. It was not a motherhood statement, it's backed by data, and this is going to end. I'll take this. Okay. So now, slumdog billionaire, big tech as percentage of S&P. You think it's fallen a lot? It's still 21% of S&P 500's market cap. That's really high, right? It's really very high. At its peak, Tesla's price to earning was double Adani's. Last year I'm talking about. At its peak, it was double. And unfortunately, a $3 trillion company called Amazon, I can't even tell you PE because it was still not profitable. Just a point. Secular outperformance of US versus emerging markets has been very high, and that's why we are, I'm not saying US will not go up. Please understand the implication of what I'm saying. I'm saying the rest of the world will give you better returns than US. If US goes up 7%, rest of the world should go up far more. And to corroborate my point, all of you must have been bearish on Europe, right? Europe has overperformed United States by 15% return in last 2.5 months. There is one developed markets index which is at all-time high. Any idea? Developed. Any guesses? FTSE. UK index is at all-time high as we speak. All-time high. So perceptions, we have just perceptions at times. Real data tends to be very different. Like I was a buyer of Dubai property 3 years back. I bought few properties in my portfolio. A lot of people like my investors, they ask me, okay Mohit, what are you buying next? I said North UK. By H2 of this year, 23, I want to buy properties in North UK. right? Because pound has fallen, right? At least from international point of view. So, and because of sentiments, and elections will be next year, and current PM likely will lose in perception, so prices should become soft, and that's a good time to buy. So, North UK. Outperformance, very simple. You know what? When crude goes up, just buy export. I mean, countries which have exports minus import greater than 0. I mean, current account is in surplus, just buy those countries. When crude falls, buy net importers of crude. Europe, China, India, all overperformed in that time because crude fell. It's a no-brainer. So, Europe went up. One of the drivers was because of the oil falling. US tech still as a percentage of US equity is 40, far higher than rest. So, technology stocks, even Indian technology stocks are a far better bet than US technology. Because institutions don't discuss like that. Let me give you perspective. See, we had California State Pension Fund I was mentioning as an investor, but there was another fund, sovereign fund called FMO, Government of Netherlands invested. And in 2008, when we launched a $550 million fund, we got oversubscribed at peak of the crisis, but FMO decided not to invest. So we were very shocked. Our returns were fantastic. You know what they said? We are over allocated to private equity. If that gets corrected, we are over allocated to Asia. If that gets corrected, we are over allocated to India. Once those three get corrected, the first fund we will invest will be yours. This is how institutions think. So, lot of questions I get asked that is dollar going to be the gold standard or is it going to be a different currency? My answer is, how do you care? Why do you really care? Please keep tracking ADIA, Canadian Pension and GIC. 3 different parts of the world, global institution. Canadian Pension is the largest in the world, among the largest. ADIA, Abu Dhabi Investment Authority, and GIC, Government of Singapore. The day they shift from dollar to some other currency, please shift all your assets to that currency. Global assets I am talking about. See, human mind is complex. We keep trying to be ahead of the curve. What do you want to be? The day those institutions change is when we should change. Put differently, the fact that institutions continue to think in a manner is the reason why other EMs and other parts will perform, because this is how the institutions think. This is how allocations happen. $7.5 trillion of buyback will reduce dramatically, but in our opinion, the buyback tax in US is also going to go up, which is also going to be a very strong headwind. Okay, events which may trigger 2023 low. Unemployment rate going up and earnings falling. Reality bites. Everyone's talking about inflation tapering. What about earnings tapering? Should stock market go up because of just liquidity? But there's no liquidity. Then earnings, and if earnings collapse and unemployment goes up, and we all know unemployment is a lag indicator. End mein hota hai, right? Layoffs happen in the end. Potential credit events. Do you know the credit card delinquencies US is at 50-year low? All of us keep talking about that credit card portfolio has gone up. Delinquency is at 50-year low. So there's a catch up. Corporate delinquency is the lowest since 2005. This is going to go up from here. So credit cost is going to go up still. It hasn't happened. The real economy, not just the bonds. And personal saving rates, disaster. That's United States of America, and very similar in Denmark, very similar in UK, unfortunately very similar in Europe. What are the top investment ideas in our view for 2023? Short US dollar, long EM, we like India, European assets. Be conscious, closer to election, Indian markets fall. Just be conscious about it. That doesn't mean who wins. It's just that maybe it's a good buying opportunity. It happens every time, every 5 years. Just be conscious about it. Long EM distress bonds, Korea because of China reopening, Mexican peso nearshoring, long China stocks, excess saving, crazy savings. If any of you have traveled to Hong Kong or Macau or Singapore, Louis Vuitton shop, you'll have a queue. How many places you see that? You actually have a queue there, right? They have massive money right now, crazy money. One, they don't pay taxes. Second, it's institutionalized corruption. And third, the saving rate is very high. From financial implication means a lot, right? Then long global industrials and small cap. We believe a small cap will have reasonably bright future in this time because the leadership will shift from deflation to inflation assets. Short US tech, we still feel so, relatively speaking. 30-year US Treasury, we were bullish. It actually delivered well in the last 2 months. Long EU banks, short Canadian, Australian banks. That means short Australian property. So that's a broad theme that I really want to bring out. Basically, buy Asia and buy the world. I can't be writing sell US, right? Okay, now India, do you think it's immune? No country, till the point we are net importer, we are not. We can't be, right? But be conscious that the mother of bull markets, I know Mr. Jhunjhunwala has been saying this, but I have just given you data points to tell you the mother of bull market has just started. The baby movers in 1960s. I am going to give you one data point today. Go and do your research. I can give you on a stamp paper, it works. The average age of a country defines the growth of GDP for next 15-20 years. Any disconnects? 1960s, United States of America, baby boomers. People give credit to Margaret Thatcher, brilliant, but she was lucky as well because UK during Margaret Thatcher days, they were young. Japan, 1980s. Korea after that, China, it's India, Indonesia, Asia. You know what's the median, not average, median is worse, right? Median age of Europe, any idea? 45. Implication of an average age is extremely large. The bull market in India has just started. Reason is, at $5 trillion, whenever it happens, when you grow by 7%, you're adding $350 billion. A lot of people say, okay, US 25 trillion. I say, 2% is 500 billion, man. You grow 2% at 25 trillion, that's $500 billion, right? Crazy. So, big stocks will become even bigger in India, right? Consumer stocks will become even bigger, and the quantum of money which will start pouring into Asia at large, institutions will start pouring, valuations will become bizarre over the next 10-15 years. It has to happen. Nobody can stop Tina. There's no alternative to it. It's not a rhetoric, it's mathematical. And US will try its best to prevent that. Mark my words. And somebody asked me, is the power of United States dropping? My question, to that question, my answer is very simple. Any of you know there is a country in Europe which was neutral for 150 years? They did not participate in World War I, II, and they lost neutrality just now. They joined NATO. It's not Switzerland, it's not Sweden. Sweden. Sweden lost neutrality. So which way the world is moving? And post that Ladakh crisis, India signed an agreement with US, which effectively means we are aligned to NATO. Please go through the nuance of that agreement. It effectively means the same. So US is becoming powerful, but the implication is high because the turbulence, wars, chances of a Taiwan attack are real. The implication in Asia will be far higher with the Taiwan attack than Ukraine attack. India will be immune to developments till it's not bizarre. When I say bizarre, till crude doesn't go to 120, 130. We don't think so that's happening because we've seen last year it didn't happen, right? Current account deficit will continue to be there in India. Elections will keep coming. Closer to election, rupee depreciates. I mean, you were arguing, remember sir, that is rupee going to appreciate? But every time I've seen from June of pre-election year till Feb of election year, before 3 months, rupee depreciate. Why does it depreciate? Money has to come in? I don't know. Or is it flight of FIs? Right? Bottom line is, Why are you always thinking dollar? Why are we enamored with dollar? How many of you have sent your sons, daughters, grandsons, granddaughters abroad for studies, higher studies? Most of us. Why look at just dollar assets? If you have future dollar or pound liabilities, you ought to think of maybe pound assets, not just dollar assets. Let me explain. There's a forum in Indonesia called CFO Forum. First event, physical event after COVID, they invited me as a speaker. This was last year. And a lot of CFOs, is like top 100 CFOs there, mostly Indonesians. And they said, we have lost a lot of money because of US, our companies have taken US debt, dollar debt, I mean. I said, but why did you do that? Indonesian rupiah appreciated against pound, appreciated against yen, appreciated against euro. Indian rupee appreciated against pound, appreciated against yen, appreciated against euro. Why are corporates only taking dollar loan? Euro loan was easily available. Even now it's easily available. Euro loan is very easily available. Why are people enamored with dollar? It's an issue. In the AGMs, companies should be asked, why are you going for dollar? Everybody knew last year, beginning of the year, the dollar will appreciate. That means pound should depreciate. That means yen should depreciate. Flip it. You believe dollar will depreciate? If I take a referendum in this room, everyone will say dollar will depreciate. Believe so. Happens or not happens is not important. It's okay to be wrong. I'm also wrong a lot of times. All of us will be. Then my question is, why would you not invest in pound assets? Because India is net importer of oil. Till that doesn't change, either India will depreciate against dollar or depreciate against the other baskets. When Indian rupee appreciated against dollar post 2014, pound almost went to 100. Euro went to 87, 88, right? So if you have a negative view on dollar, start using your LRS money for pound investments, for God's sake. Right? Because pound will appreciate. It's very important to understand. So why is there a need to have dollar pound asset? Because if you have future dollar pound liabilities, you ought to create future dollar pound assets. I'm going to show you something. All of you, you have a fiduciary responsibility, in my opinion, to show this, because had my father seen this, I would have gone abroad for studies. It's not a complaint. I mean, I've been blessed, best of institutes in India, right? But had to work really hard, 100,000 people writing test, get a CAT score of 99.7, then get interviewed, right? Engineering, how much, I mean, I tell my team, you're an engineer as well, that whenever we are working on our products, I'm actually telling you, last year when there was complex market, I said, remember your engineering days. No, not during engineering, before that. The work we did to get into engineering, that's the effort I need. Have we discussed that many times? Because that's the toughest thing to do, preparation for engineering in India. Right? Because of this issue. The US, forget rupee, education cost in US, education sector inflation, sirs, ma'ams, all of you have a different inflation. Tell me one wealth manager outfit or anybody on TV has ever told you that. Tell me one. Has anybody spoken about family inflation? Your family inflation is different than yours and mine. Do we get it? Why? Because I might want to send kids somewhere. We might go for holidays. You might want to buy, a lot of people want to buy the latest gadget. Every family should calculate their own inflation. To me, it's the biggest farce on the planet. What have government inflation got to do with you? Please calculate your inflation of last 10 years. How much you were spending 10 years back and how much are you spending today? Calculate inflation compared to RBI inflation index and please tell me how much is it higher. I can bet in this room 95% will have higher inflation than RBI inflation. Do we agree? But nobody talks about it, right? That's so critical. And that is where it starts. Education cost in USD has gone up at 4.63% annually. It's crazy. And on top of it, rupee has depreciated 3.8%, just rounded to 4 over the last 20 years. Add to that, this is the cost of inflation from now compared to 15 years from now, 29. That's almost 3.8 times. Or UK, for that matter, or Australia for that matter. Because we are net importers of crude. We are net importers of electronics. We are net importers of black gold. Right? Gold, black gold, electronics. These are three main issues, right? All three being attempted to solve, I must say that. The largest factory of Samsung, where is it now? Nobody sees that. It takes a lot of heart to do it, I personally feel. Forget the politics. You can't run a country without politics. The job of a politician is to do politics. Come on. My job is to sell products. So, but lot of those things are being corrected, but still we are net importer of currency. I mean, dollars. And hence, this is the real risk. But if you go and invest this amount in a dollar asset, which gives some returns, then our product, I am telling you, has given. You check NAV, our products onboarded on Swiss Life's variable unit link plan, not easy to get. State Bank of Mauritius selling in Africa, Sovereign Bank, Bank of Singapore, Credit Agricole, so many places onboarded. Last year, every quarter we get dividends. Okay, it's artificial intelligence based product. And I say with pride, Indians are good in technology and pharma. That doesn't mean we're not good in auto. I'm sitting in Pune, I know. But the renaissance in technology has been massive. I have 17 data scientists who understand predictive data science. The head is actually from Bihar. I have requested him many times to come here and do a session. I'm actually telling you, he sweats. He says, "Oh, mere one down ko le jao." He's from Colombia. Mathematical wizards. Can't speak. I'm telling you, you will not believe the returns. It's actual, given back to clients. But कहेंगे ये कैसे हो रहा है? कर रहा है वो. US बैंक, top 4 banks के लिए सर hedge fund manage करता है. But can't speak. It's a pity. This is the point I want to really drive. Clients must create the future education cost should be taken care. I'm glad Oxford के साथ sign up हुआ है finally India का. I hope 10 more will happen so that we study here. But till then, this is a real risk because not everybody can get into IIT and IIMs. It's becoming tougher. So this is the pitch I want to make today, that your clients must have either in pounds or in dollars. And why you bothered about short-term dollar? Maybe half put in pound, half put in dollar. How do you really know which one will depreciate actually? I have never tamed it. If any of you have tamed currency, would love to learn. We are not setters of currency, right? We are takers of currency. So this is the reason and more benefits around it, but is pound investment under LRIs better than dollar investment in current market scenario? I have invested in this product myself, my own $7.5 million in pounds. In pounds. Currently I have invested in pounds. What can be a good approach for investors in such complex scenarios? Wealth preservation, wealth preservation, wealth preservation. It ought to be around wealth preservation. Interesting data point. Ruler of Dubai, last 5-10 minutes, ruler of Dubai was asked in a forum recently, where do you see your great grandson from now? Have you heard this? You know, he said, my great grandfather was on camel, and there's a risk my great grandson will be on camel. I thought I'll show a mathematical slide to prove it. 95% of our time we spend on wealth creation. Ask your clients, what percent of time is on wealth creation and what percentage of time is on wealth preservation or wealth management? Hardly 3% businesses in the United States of America, the mother of capitalism, like it or not, it is mother of capitalism, survive 4th generation. That's it. Hardly 3%. This is the biggest risk. India, even in Pune, now you have 3rd generation coming, right? Because Pune also is a hub of old economy firms. A lot of them are getting 3rd generation. And that challenge will start now. That challenge where owners are now in their 60s, 70s, early 80s, That challenge is starting now, from here to next 10 years. You should calculate only for your clients. It will be nice exercise that what is the total quantum of wealth transfer which will happen over next 10 years in your client's portfolio. It will be very nice exercise. You will be shocked to see that. Are your clients ready for that? Very important point. Fixed return strategy is an extremely important strategy in a dollarized or a pound environment. Data, data, data. Mr. Holmes said, I can't make bricks without clay. One of the primary expertise of TIW Capital Group is predictive data analytics. Simple. I'll prove it in very simple terms. And to prove it, late 90s when I did my engineering, there was nothing called Google. To me, the biggest disaster to mankind is Google on a lighter note. Information overload. Have you gone to sometimes doctors and said, ye lag raha hai, mujhe ye lag raha hai, and doctor gets irritated, right? You actually ask. I have a lot of doctor investors. Not exaggerating. Doctor will come and say, you know, I'm the best in my industry, but everybody who comes and says they know better than me. They've already done their research on Google. Issue is information overload. Imagine for financial products how big an issue it is, right? Because humans continue to do transmission of information at 200 hertz. 15 years back also we were doing at 200 hertz. Today also we are doing at 200 hertz. Forget the number. It's the same. But computer is 7 times faster than that, and 10 power 15 is the processing capability now. So my question to all of you is very simple. Each one of you will have clients who will boast that they got a stock right. I would love to know any client who says कि उसने नहीं किया. What's the probability, please ask the same client, that you're going to get it 5th time right, 25th time right, 50th time right, 500th time right? Probability is going up or down? Can I repeat that success with the same energy? Is it easy? Answer is no. Humans can predict. Technology can repeat. As simple as that. I couldn't have given you a simplistic explanation of this. A lot of language being called chat GPT, artificial intelligence, so many things are being said. Simple way to look at it is, I can predict. Technology can implement it and repeat it. If you open the phone every time, it opens, na? Does it rebel? Say, aaj nahi kholunga. That's called, it's very important, it's called repeatability. To repeat that success in such a high energy machine learning environment, when NSE can fall suddenly 10% sometimes once in 24 months or 12 months because of algos, it's very important to understand how to back or invest in some money where technology can be the driver, but humans create that. So we have acquired companies in the last 3 years which have complete knowledge of only one thing, predictive data analytics. These are teams who have created algorithms completely around data analytics, predictive data analytics, predictive data analytics, and that's what has created serious strength for us. By the way, I want to say compliment, majority of them are IITians. Whether they are in Dubai, whether they are in Singapore, London, wherever, they are majority from IIT. And that allowed us to create a very simple product. We call it a fixed return or a savings plan, where we are giving fixed quarterly dividends back to investor. It is listed, all have ISIN numbers, quarterly dividend paid back to their account, not only in 2022, but even in our buyout fund, sir. Even in April 2020 when the world crashed and there was lockdown, we paid. Right? So, depending on the quantum internationally, let's say internationally if somebody does $1 million, they get 2.6%, this is net into their account. We can take US money as well. Class action suit under US SEC is applicable on us. And quarterly dividend, depending on amount, if it's 250K, 2.125, 500, 2.25, 1 million, this. Simple, paid back, anytime redemption, the 30-day redemption cycle, currency protected, invest either in dollar or in pound. If you believe it's a pound, basically what you believe will appreciate, invest in pound. If you believe dollar, invest in dollar. If you believe now it's pound and 1 year later dollar, shift it to dollar. Both options there, because one of the two will appreciate, right? And I'm happy to share that we have created a LRS option for this in the last 35-40 days. wherein thanks to our local tax partners in India, we have been able to structure it for Indian investors to invest abroad using LRS, wherein, and I know there is a constraint of 250K per family member, but husband wife can put together do 500. We are nearing March end. So if it is not used, if you believe this is value, it can be done. And on 1st April again, it can be done before TCS implementation. It's a fixed return, dollar or pound. Let's say if somebody does 200K, it's 10% pound yield. The beauty about what we have done is, thanks to local tax partner, we have structured in a manner where if the client holds it for 2 years, it's not necessary to hold. They can redeem like tomorrow morning again. You invest today and redeem tomorrow morning. But if you hold for 2 years, then long-term capital gain with indexation benefit is applicable, which means the taxation drops dramatically to annualized 6-7% tax, which is really low. That's the advantage we have got in the LRS, extremely strong tax benefit. So anytime redemption, dollar or pound, if you believe Indian rupee will appreciate against US dollar, people should use the pound option. And if you believe it will not, use the dollar option. Both options are there. Well, in terms of performance, NAV has gone up every month. Every month. I have my own, as I said, 7.5 million in this product. Our risk reward has been extremely favorable. We only operate on ETFs, exchange traded fund, which are dollar denominated or pound denominated. It's nothing to do with market risk. It's quant model. We don't care about market direction at all. And there are $5,000 denominated ETFs, huge depth. If you believe market will fall, there are inverse ETF. It's a long only, no leverage, no margin call, no derivatives, nothing. 3 dysfunctional products of 2022. I call them dysfunctional because they were really bizarre. Currency. If euro, pound, yen got battered, it's dysfunctional. Zero exposure. Bonds, zero exposure. Commodity, zero exposure. Individual stocks, zero exposure. No event risk. Why talk about Adani? If Elon Musk buys Twitter, Tesla falls. So exchange traded funds are like mutual funds. And between indices, semiconductors, technology, pharma is 80% of our volume. We do almost $2 billion a quarter, 58% long and 42 inverse long. US 90% volume, 10 LSE. 62% accuracy, 67.5% profitable days. NAV gone up every month. 100% dividend. Clients have got dividend every quarter and redeemable at any point of time. Onboarding faceless. During COVID, we innovated it. Faceless onboarding, which means KYC is there, our backend team fills the form. The client just needs to have internet, click, 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 goes to the administrator's Apex. This is custodized and onboarding is faceless. So, long story short, my idea was today to talk about 20, 45, 50 Asia value of how things are changing globally. Inflation is here to stay, volatility will be high, what's going to change in West, why it's changing, implication on finance, but implication from macro point of view, why it's important to have future dollar assets, because if you want to send your kids abroad or your clients want to send it, the education inflation is very high in US, UK and Australia. And there's a natural tendency of Indian currency to depreciate against some of these currencies in any case. Long term, they all depreciate because of net importer of oil status. And hence, it's important to start creating some portfolio so that the education part gets taken care. Happy to take questions and clarifications. I've tried to compress too much in a short time.
Take some time to digest.
You said that the Indian currency is susceptible to depreciation.
Yes, sir.
Just because we are importing more of crude.
Crude, electronics. See, electronics was never a big issue. It's become a very big issue in the last few years.
But now with so many industries having been set up in India, which are migrating from China, and the government is bringing around new policies, which is changing or revamping the whole structure. So don't you think it's going to make a difference?
Answer is 100% yes. The pace of depreciation will start reducing. But is it going to happen overnight? It's never going to happen overnight because we still are net importers. Plus the subsidies in India will continue, right, sir? Because there's a digital divide in India. The rural India needs a lot of subsidies. So because of that, the fiscal deficit will continue. That also will lead to more demand for debt, rupee debt, right? So the currency, the float will have that challenge. So one angle you're saying is export import. What about the subsidy part? Right, the state subsidy, the central subsidies, that will only continue to be there, right? That also is a drag on the currency. And there are off balance sheet items as well, right? So while this is getting addressed, which is still not addressed, it's brilliant direction. So the pace will reduce. That's why I'm saying the depreciation pace could be maybe 2.5%, 3% and not 4.5% like in the past, which has been true for the last 10 years. Last year aside, if you actually look at Indian currency, it did far better than even developed market currencies. It's been very stable. I actually believe it's very stable. Other currencies have moved 3, 4, 5% in a day. How many times have you seen Indian rupee move 3% in a day?
With the government encouraging so many new addition of new industries to be set up, like the weapons export has already started. I'm sure.
So I'm saying I'm bearish on US dollar, but I'm saying that till the point you have net fiscal deficit. See, which currencies have appreciated globally? Where they have current account surplus and fiscal surplus. Now, are you expecting fiscal surplus in India? You might expect a current account surplus in few years, but is India expected to become from a non-welfare to a non-welfare state, where the state subsidies and the central subsidies to win elections will just vanish? If you believe that's happening, then Indian rupee will appreciate. Because everyone just rightly talks about export import, but our biggest drag is fiscal deficit, and developing countries and democracies will continue to have that. The pace will reduce, which has genuinely reduced in last few years. But is it still negative? Yes. If that's the case, there will be depreciation. I kept it simple, intentionally very small, but go ahead, sir. So basically what we do, basis the algorithms we have, we look at momentum, sustenance or mean reversal in exchange traded funds. So underlying investments are in ETFs. So my investment could be in Vanguard, ProShare, Invescos of the world, but depending on momentum. I'll give an example. So when Nancy Pelosi went to Taiwan, semiconductors had a drag. Now, humans have a very interesting tendency, very important, which hasn't changed. All our algos are based on that. We buy when everyone buys and we sell when everyone sells. Mr. Warren Buffett said exactly the reverse. But actually, one thing which hasn't changed about humans since Homo sapiens sapien, right, existence, which is very important, our behavior continues to be buy when everyone buys and sell when everyone sells. So if you actually see when things fall, they fall a lot, it drags, and when they go up a lot. So we are not having anything to do with momentum. Event happens, it leads to sustenance of that. We ride that curve. So our algorithms are able to show. So we don't predict, we look at actual data. Consistently, let's say 3 days it moves, then it will say buy. And our holding period is less than 4 hours. Less than 4 hours. So it's a momentum sustain and mean reversal. So, I mean, those who have seen some of the data we can share are some of the cases accuracies, I mean 62%. Okay, I'll tell you a very interesting thing on that point, why we make money. Anybody can sell when it is falling. She might say, I will put stop loss of 5, you will say 3, he might say 7. I'll ask you a $1 trillion question. Where will you sell when it's making money? Will you sell at 3? Will you sell at 5, 10, 20? I don't know. And I would love to learn. But the machine knows. Let me answer how. What we do is, we don't decide. And that's why our risk reward is very favorable. If you see 1.16, it actually shows how much we make and how much we are paying. So how we do is, that when it goes up, let's say 3%, our stop loss becomes cost. Humans don't do that. When it goes from 3 to 5, let's say 2% increase incrementally, stop loss keeps moving up. So 0 becomes 3, goes from 5 to 7, it becomes 5. This allows me to maximize profit without human intervention, which allows the risk reward becoming favorable. You do that in your portfolio, I can give you a stamp paper, you'll make money. I hate leverage. Bhushan sir can tell us in our buyout fund, all companies have zero debt. Sir, in 2020, to me, the biggest paradox of human life was that organizations are for profit, and every for profit organization everywhere on the planet, including India, it was paradoxical that they started asking for government moratoriums. We needed none. We have zero leverage. I am a big believer, I have zero debt in my personal portfolio, zero home loan, because I've worked in Mumbai, sir. I worked in Tata Sons, Bombay House, Tata Industries Limited, which is the holding company of Tata Sons. And I have worked in Tata Strategic Management Group, which is a consulting arm of Tata Sons. I did not get loans, sir, in 2004 because, and I had to buy for my parents who were retiring. And a big issue. At that time, I was to buy a property. I just did my, I joined Tata Sons, good salary. The loan was, the property was 20 lakh rupee in Delhi. I was working here, parents were there. This is very interesting. And what happened is that I was not getting it because there was black money involved. And I didn't have black money. And actually what happened is, IDEO was the only bank who were giving 40% for refurbishment on top of the fixed. And I had to agree with the seller that you please increase the price, I will pay your tax. I pay your tax. And that's how it got bought. So I have through my learnings, I believe that wealth creation, it's extremely foolhardy to have leverage. Sir, I mean, why do you create wealth? Why are your clients creating wealth? For intergeneration wealth transfer. To pass on to third generation, fifth generation, 10th generation. To me, it's paradoxical, then I start taking leverage. And thank God RBI doesn't allow it. I'm telling you, 90% clients would have got wiped out in India. I know you check with your NR clients, how much leverage has created havoc, UBS portfolio, BOS portfolio, Credit Suisse portfolio. Clients in Dubai, sir, clients have suffered 70% loss of accumulated wealth for 20 years. Zero leverage. Sir, private banks is the biggest scam on this planet. What is a private bank? It is commercial bank plus plus distribution company. I'm giving very clearly, it's a commercial bank plus distribution company. Let's say you have $50 million internationally. UBS will come to you, will say, sir, I will manage your wealth. I will tell you what to buy. Now you sign this agreement, I'll also give you leverage. My commercial bank will give you leverage. On that 50, you take 50. I get interest on your expense. Your asset becomes your liability, and your liability becomes my assets now. This is exactly what's happening. I'm shocked. It's the biggest scam, right? What have I done? I've transferred my 50 million to their books, right? Taken their bank's money and transfer liability into my books. They earn NIM on that. They earn distribution fee on that 50 million as well. And if something goes wrong, who owns the first charge? The private bank. I own nothing. So I have been telling a lot of my existing investors, they love us for this reason because I'm blunt about it. There's a Citibank product which to my client, one of my clients put in 250,000. I'm ready to make you speak tomorrow morning to define number of countries you want to talk to my investors. To 15 countries, in 48 hours they will talk to you. Because my maximum growth globally is through my investors. 250K he invested, sir. And Citibank managing his account, he sent a product. I can even show you what analysis we did. I can email it to you. We sent it to the client. Flowcharts we made on that product and sent. And after that, the client didn't invest in that because they said it's capital protected and transferred $2.5 million to us. I never asked for it. I hate leverage is what I'm saying.
Mohit sir.
Sir.
Sorry to interrupt you for a minute. Number one, you all know there is a lucky draw. So anyone who has not put his card, visiting card in the box, probably please do that. And Mohit sir, one simple question, very innocent one from one of the participants. What is LRS? And how, very innocent question. And let's understand that this is a quant strategy which you are using.
So
what is the minimum amount which one has to put in? Maybe. Yeah.
Okay. Okay, markets fallen in US. That means inflation must have been higher. Yeah, I'm just checking. Okay, so liberalized remittance scheme under India's Reserve Bank of India's policies allows you to invest abroad. India doesn't allow capital account convertibility. What does it mean? There are certain countries like in Singapore, I can transfer as much as I want abroad, right? If I have $10 million in my account, I can transfer $10 million abroad. But in India, the government allows individuals only 250,000 US dollars. Why are we enamored with US dollars, sir? First thing we should change is pound or something else. But 250,000 US dollars per family member, it's allowed to invest abroad annually. So husband and wife put together technically can transfer $500,000. Now, this has a new element called TCS, tax at a collection point, literally, right? So government has come out with 20% TCS when you transfer abroad. However, it can be netted off against your other advanced tax liabilities, exactly like the way TDS works. So I don't think so it's a big issue in my opinion. If you have any other tax liabilities, you can just net it off. In our product, because we are an expert fund, where US SEC class action suit is applicable on our fund, the minimum is $100,000 or in equivalent term pounds. However, for Pune market, we have signed up with State Bank of Mauritius on a solution in which we discussed with you. We have reduced the ticket size if that investment goes through the SBM route, it's a sovereign bank, to basically 35,000 US dollars. 35,000 US dollars as a ticket size, we have reduced it to for a single investor. Nomination facility is allowed, a very important point, because while India has nomination, and I don't know if you know or not, but nomination is not enough, you must still have a will for bank accounts in India. Are you aware? Right? If your clients haven't done it, please do it. And if any of your clients have Dubai account, ask them to go and file a will in Dubai. A lot of your clients will have Dubai account, and majority of them wouldn't have done their will filing in Dubai. If they don't do it, Sharia is applicable on them, which means their spouse will not get anything, kids will not get anything, first their brothers and sisters will get. Right? Just an important point, because most people miss this out. HDFC has done a lot of accounts in Bahrain and Dubai. Make sure that will is done. So nomination is allowed in ours, a big comfort. You can invest under LRS maximum $250,000 per person per year. But we have created a ticket size for Pune specifically, 35,000. Please note, this is not being done in other parts of India. It's especially because sir has been with us for 6 years. He said that find a way to reduce it. We have worked out a deal with State Bank of Mauritius, SBM. We have very senior relationship, and that's why they are okay to allow the KYCs coming from this part to be accumulated at their level, which allows, we will get, like, I'm assuming 100K will happen, because in any case I already have crossed 100K from Pune. I mean, I have many investors. So 35,000 is the minimum which is allowed, and it can be transferred and withdrawn at any point of time. We have a dividend reinvestment option and a dividend payout option, like you have in mutual funds. So in a dividend payout, there will be quarterly dividend. However, under Indian Income Tax Act, it will be taxed at a maximum tax rate. A smarter investor will go for a reinvestment option, wherein we will, when they want to redeem, do a buyback. Right? Very simple, means it's redeemed, but we call it buyback. And if you hold it for 2 years, if the client holds it for 2 years, it's not necessary. They can hold for 1 day also. But if they hold it for 2 years, the taxation reduces dramatically to long-term capital gain with indexation benefit, which under Indian law is 20 minus indexation benefit. RBI does it every year, you know it. Effective tax right now, if I look at indexation, will be 12-13% odd. Because it is 2 year, your effective tax rate drops to 6.5%, which is a steal. It's lower than your capital tax technically. So that's the option. However, I also want to mention, if any of you have NR clients, use us as a guinea pig, and I mean it. Use us as a guinea pig and get share of wallet. My global head, he's on board of many companies, Ranjit, while I was going up, he told me, please use the word share of wallet. मैं भूल गया था. मुझे याद आ गया तेरी शक्ल देख के. Share of wallet, it's an important point, because you can actually target their share of wallet sitting in India for a global dollar or pound product. We have a very important tool today, and we have investors in almost any country where I'm sure you will have clients. And we have good references in each part of the world, whether you need in Australia to US to Qatar, Africa, UK, Dubai, name a country we have. It will help you acquire more clients. Returns are there, there's a listed thing. You know the NAV and you can redeem at any point of time. So, I also recommend not just LRS. This could be a very good tool, even if you don't have NR clients, but you know clients. This could be a great product to increase your asset under management. How many mutual funds will come and give you a pitch to increase your AUM? They'll always fight for your AUM. कि वो बिरला से यहाँ दे दो, यहाँ का वहाँ दे दो. मैं पहले इस कंपनी में काम करता था, अब इसमें वो इसलिए मुझे दे दो.
उसी रिलेटेड मेरा क्वेश्चन है.
Sir.
I want to ask. Recently, IDFC launched a US Treasury fund. It's a feeder fund. So how can we differentiate between your?
It's completely different, sir. The reason is that again, this is a fixed return product. The returns will not vary. In your standard language, you know what is the chart structure? It's 0% on this. You can read. You'll say, is this man crazy? How can it be 0? Which is the largest product in the market, sir, on that point? Largest product. Fixed deposit? Any doubts? जब आप बैंक में जाते हैं, when you go to the bank, does the bank manager ask for processing fee? Do you care about branch manager's salary or branch rent? Right? Exactly, savings plan. This is a savings plan, sir. It's contractually obligated for us to pay that return. And hence it's a fixed return. Put differently, whatever is the spread, the NIM is what we make. And we make good money, sir. Return सामने दिख रहा है. If any of you have read this graph, you already know what is our actual return in this product. Can anybody tell me? 16, 1.16 is the risk reward. 10 देता हूँ सर मैं, बाकी हमारा है. बट क्लाइंट को मिलता है, उसके बाद हम रखते हैं. बट अगर कम आया तो हमारी बैलेंस शीट से जाएगा. 7.5 million is the sync fund which I have only put. We also have a line of credit of 1:1 from a sovereign bank. Not leverage, line of credit. Line of credit किसको मिलता है? जिसका बैलेंस शीट स्ट्रांग हो. We don't use it. But if they are redemption, when do people lose money? Fidelity याद है? Oh, sorry, no. What that? Which fund happened here? Franklin. Sorry, my bad. Franklin Templeton. It's called asset liability duration mismatch. यानी कि you went to a bank and did a deposit and took a 1-year FD, right? Bank ने home loan दिया. Let's say sir को दिया. Sir is paying EMI very nicely. It's a 20-year home loan. 1 year later, she goes and asks the bank that please give me my FD. What happens now? He is paying EMI well, but there is an asset liability mismatch. So the bank has no choice but to sell it at a deep discount. So illiquidity becomes a insolvency. My fund, that risk is not there. Why? Entirely is ETF. What is settlement? Congratulations to you. You have changed settlement to T+1. US is still T+2. So I get my money back in 2 days. What's the redemption? Rolling redemption of 30. Do I have an asset liability duration mismatch? Answer is no. This is not a new fund. NAV has been growing. So assets are already more than liabilities. Flip it. किसी भी टाइम पे आपको NAV ड्रॉप होता हुआ दिखता है. This is not paper NAV. Underlying ETF, my counterparty is Invesco, ProShare. How can I manipulate their NAV? They are listed on US exchange. Right? My counterparty only 5. And when I say counterparty, till 1 year back, people were discounting. हाँ ठीक है. FTX happened, na? Counterparty risk is real risk. My counterparty is only Russell, Nasdaq, LSE, Dow Jones, and S&P 5 basically. So there is no. So the only other reason when people lose money is asset coverage, performance risk. NAV is going up. There's a sync fund. There's 1:1 line of credit. Because we don't use leverage, who owns the first charge? Clients. My end clients. And अभी आपने एक private equity fund में invest किया, first charge आपका है, you have the first charge. What will you do with those unlisted shares? How will you sell it? Here, what is the underlying? ETF. Any broker of yours can sell it in 30 seconds, including ICICI Interactive, any broker, or Stockel, or anybody. Right? And the most important mother of all, class action suit under US SEC is applicable on our fund. Flip it, reverse चलते हैं, capital protection पे. Class action suit is applicable. First charge of asset, liquid first charge of asset is yours. No asset liability duration and all. There's 1:1 credit line, sink fund of 7.5 million. It's not skin in the game. I've been in this industry now for 23 years. अभी मैं skin in the game नहीं बोलता लोगों को. It's my own money, I earn. Right? But then that's a recourse for end client if assets drop. Right? But it's not a new fund. Assets are already bigger than liability and there's nothing private about it. Private in the sense there's nothing unlisted in it. It's all ETF. But all these four are irrelevant because NAV is growing. I have my largest client, I was mentioning to one of the gentlemen here that my largest client, some of them are a Class A shareholder of Berkshire Hathaway. I have also learnt after 2008 crisis, I don't take more than $10 million from a single investor. And I can even make you speak to guys if you want to, my clients who are now arguing with us, they want to increase it, we don't allow it. So this is a very stable fund, and today's fund managers in the international context, only those who understand macroeconomics, I believe, can have medium-term success. It's too complex. And the most interesting thing is, it's not a question of whether Elon Musk is right when he buys Twitter or Adani is right or not from financial implication point of view. It's a question of when you're doing exchange traded fund, they're like mutual funds. Even if Elon Musk tweets, or even is that, what's the company, Israeli company's name? Hindenburg, right? Hindenburg, the naam nahi samajh aata, right? So even if it is right or wrong, there's an event risk in an underlying stock. But is that true in an ETF? No. Because even if a stock moves 20, 30, 50%, ETF will not. That's why we have stuck to ETFs. You have to see how the boundary conditions are managed from a risk point of view. No leverage, no shorting, no margin call, no derivatives, ETFs, long only, dollar denominated, no cross currency exposure, asset liability duration mismatch not there, asset coverage strong. But I believe that two values, takeaways, do your diligence, that's fine, but take the takeaway from LRS point of view and do pound if you believe dollar will depreciate. But more importantly, use this as a product to get NR clients.
The risk is there, percentage of a stock in that particular ETF.
It's not, because it is a simple savings plan. You think money, see sir, when ETF falls, money is lost. I am market agnostic. United States of America has inverse ETFs. Okay, I'll give an example. Okay, this is just a wild example. All of us knew that US yields will go up last year January. Do we agree? Okay, I'm just giving as an example of a ETF by name of TMV. Okay, it has internal leverage. I'm just giving as an example, just one example, TMV. Anybody has Google to just check the price? Investing.com, it's a very important point. Investing.com, just go and check what is 1 year return. Can anybody tell me? This is US Treasury. अभी US Treasury से ज़्यादा safe तो नहीं है कोई दुनिया में. अभी US Treasury default कर गया तो मतलब it's a risk. World has a risk. Point I'm trying to drive is US market has inverse ETFs. When market goes down, these mutual funds value goes up. So semiconductor will have an inverse also. India में नहीं है. मतलब there is no depth in Germany, no depth in Japan. I'm not able to trade. This algo can work on any market in the world. By the way, which is the best performing, one of the best performing mutual funds in India last year? Quant. It's not now? I don't know, but how much did it turn?
They were toppers in all the, but
Adani. Why do it in stocks, do it in ETF? Because there's no depth in India in ETFs. That's what I'm trying to drive. The problem is you take underlying individual exposure, it creates risk. So ETFs still, see what happens is it's not one ETF, there are 5,000 ETFs. Ek to, how much will be Adani's exposure in that particular ETF? How much is that ETF exposure in total? And what makes us think that our algo wouldn't have triggered a long on inverse ETF where there was Adani? When it kept falling, it went to 1,000, no? That's called, it's called sustenance of momentum. People make money in momentum. No, I disagree. You make money in sustenance of momentum. अगर वो कुछ साइंस का थोड़ा सा याद है, एक होता है velocity, एक होता है acceleration. That's the second derivative. So acceleration is when you make money. So the algos are, when Nancy Pelosi went to Taiwan, sir, our semiconductor inverse ETFs When Ukraine attack happened, you go and check what happened to crude, how many times it went up after 7 days. Not in the first 7 to theek hai. After those 7 days and next 15 days, how many days it went up? Money is made in that. A lot of people ask me, should I buy US Treasury? I said, don't do that. Do something. The day Mr. Powell comes on TV and says, I pivot. You know what that means, I pivot? I'm not increasing rates anymore. Sir, 7 to 10%, 5 to 10%, whatever number you define, treasuries will rally. You will have FOMO, fear of missing out. Pehle hi kar do. No, don't have FOMO. Let that event happen. Now, next day, the bureaucratic institutions of the world like sovereign funds and pension funds, their committees will meet after 5 days. Then they will decide, intentionally I'm going slow, then they will decide now we'll allocate $200 million in US Treasury, and then 30 days again it will keep going up. We have to understand, world is all because of behavioral science. It's technical analysis is all bullshit, with due respect. Sorry about the word. It's behavioral finance. It's demand supply. When that event happens, institutions will react with a lag, and that money will follow suit. That creates sustenance of momentum. I'm just looking at inflation. Core inflation, month on month, 0.6% compared to 0.4 in US. So US Treasury, you are very keen to know that TMV. I thought somebody will take it out because it will better, but let me do it. TMV. Sir, can you tell me 1 year return? This is your treasury. Oh, sorry, sir. This is your treasury. See, the good part is it doesn't misbehave. It will still open. TMV. TMV. 20-year treasury है सर ये US का. गिरना चाहिए ना प्राइस इस ETF का. Sir, please tell me 1 year return. नहीं. This is US Treasury 83% return, sir. US Treasury का है sir 183% return year on year in a long ETF. I can tell you one thing. After looking at US market trading, I'm generally saying ETFs. I can give you on a stamp paper. There's no comparative. Depth है ना sir जो वहाँ पे. There's no depth compared. Of course, I am invested heavily in India. The first stock which I bought in my life was actually I shouldn't have bought because my summers was in ITC. मेरे MBA में summer internship होता है वो ITC में था. वहाँ पे लिखा होता cigarette smoking is allowed everywhere in the building. Good or bad, I don't know. I just went and bought. My boss said खरीद ले बस. बहुत लोगों को addiction है इसका. I am a teetotaler, non-smoker, but he told me that just my regional head north. He said कि ये बेटा इसकी addiction बहुत high होती है. You just buy the stock and never sell. So basically, the beauty about sir, this is we all are used to thinking that market goes up, money is made, market goes down, money is low. Hindenburg made money in short. I don't short. There are inverse ETFs. You go long. There is massive talent, sir, in India. Most of them are, most CEOs in US. You know, okay, let me give you an interesting data point. What percentage of United States are Indian origin? 1% roughly. 1%. What's the total tax? These 1% Indians give how much tax? 6%. There was recently a Republican senator, because Indian students are not getting visa immigration easily, including my niece. She's actually done from DY Patil Medical from Bombay. She's not able to go there for higher studies, MD के लिए, because visa नहीं मिल रहा. Can you imagine? 5 years of hard work. So the senator went and said, we are talking about a community which doesn't carry guns, behaves, abides with every law, is 1% of US population and pays 6% of American taxes. Please, Mr. Biden, can you solve their issue? We need more people like them. Indian technology experts, sir, hats off. One system which has worked well for India is the technology piece. Brilliant algorithm, sir. Brilliant. I can show you also. मतलब देखने वाला है. This is, I gave you an example, entire room of experts. I just gave you example of US Treasury. Lot of my clients came and asked me, should I go and buy HSBC corporate bond? I was staring at their face. I said, how would I know? I'm not in HSBC board. How would I know? But then I said, tell me something. If AAA rated UK bond is not safe, what makes you think anything else is safe? Why buy bonds? Bonds right now are the most dangerous thing to touch because they are going through violence after 40 years. First time they are going through violence after 40 years. Don't be surprised if you see a massacre in markets in next 2-3 months. I don't know, sir. देखो हो रहा है ना अभी जब से बात कर रहे थे. Did we have any position just before this data? How many? Louder! खाना खाया?
0.
0. Why do you trade when there's data? We had 0 positions. You ask him. So we have 3 members who are in risk committee. We have something called a risk committee. I am one of them. There are 2 more. And it so happened in one of the forums, I mean, I'm swearing this happened in Mauritius. We were sitting with a bank, large bank, and 3 of us were there. This is risk committee, right? And in the dinner table where the CEO, the chairman was sitting, and we was, talking, we had a laptop with trading terminal. I said, this is weird. I've never seen anybody, you guys are doing it. I said, of course not. Do you think we don't have people? So what are you doing? I said, we are the risk of risk. And unfortunately, all 3 of us are sitting here. So we have no option but to have this data here. Sir, in India, you have heard of Abu Dhabi Investment Authority. Sir, we say with pride, we got RDR to invest in our fund in 2007. They invested in our India fund in 2007. And we used to get them here and have a jet चार्टर प्लेन करके उनको लेके जाते थे. बहुत सस्ता पड़ता है चार्टर प्लेन. क्या है 300 लोगों का फ्लाइट का कॉस्ट है. बट व्हाट इट यूज्ड टू डू इज नो अदर इंस्टीट्यूशन इंडियन फंड मैनेजर कैन मीट देम बिकॉज वी टेक देम समवेयर, hijack them. We thought we were doing something smart and we got battered by institutions like anything. The first thing they said is, we were giving great return. The first thing they said is, we want to have a very serious discussion, please, extraordinary general meeting of all LPs. We were shocked what happened. You know what they told us? All of you were in the same flight. God forbid if this flight crashes, what happens to us? We were like blasted like anything by institutions. He said, we can be in the same flight, we are institution. You guys can't be. All of you as decision maker can't be. That's the level we think. The weakest link in risk is to be covered because this is hard-earned money of investors. Knowledge, sir, this 83% return. I will still not put entire money in this. This is US 20-year treasury, sir, has given 83% in this. Any other questions? Sir.
India is trying to negotiate with other countries in Indian rupee terms. So how the foreign US dollar or pound currency will affect such negotiations?
So you're talking about swaps which are being created by India with other countries. So sir, so I'm saying very clearly the Indian rupees has been actually very stable in 22, right? But the pace of depreciation medium term will continue. In my opinion, it will taper down to 2.5% from historic 4%.
It will not make major changes. That is what
It will not make major changes. But the problem is, sir, that if you have future dollar or pound liabilities, you ought to have some assets. What if something goes wrong? What if Indian rupee depreciates by 5%? What if, like, I know a lot of countries, there is pressure for them by IMF to depreciate, not Pakistan, I'm talking about Kenya, for example. Rutos seem to be very similar to our current Prime Minister. And their currency is depreciated from 100 to a lot of most Gujaratis are there, right? They have 10% of their GDP is by Gujarati community. And 135 is the currency now. And it is clearly anticipated it will go to 150, 155 because IMF wants it. So my point is that Unfortunately, one thing I've learned over my 23 years, there's only one thing I've never been able to predict, and I will never be able to predict, is currency. It is so much complexity. Reason I'll explain. You guys evaluate companies, right? If it's an international company, Indian company, there is one common framework of accounting standards. What is that? IFRS. Don't you think that the world is teaching us CRS, FATCA, Basel norms, everything, but all the politicians don't want to do it to themselves? Where is the standardization of norm for sovereign bonds, sir? Is there any standard for sovereign bonds? It's very intuitive. So the off-balance sheet item of India is different from off-balance sheet item of China, is different from off-balance sheet item of UK, is different from off-balance sheet item of United States. Please tell me, how will you create a credit portfolio of sovereign bonds? Fundamental point. That is why I was mentioning that the fiscal deficit will equally impact currency, not just the current account. What is being done will reduce the deficit on current account. India could even become net exporter over the next 5-10 years. My view, I actually wrote an article a few years back that India could become a net exporter, and likely. But what will you do to fiscal deficit? Because these liabilities, because of the digital divide in India, where the rural population are below poverty, continue to need support, and I genuinely believe you need to give support. Not because I'm standing here. Trust me, I have investors in Nigeria. If you are rich in Nigeria, it's scary. I've never been to Nigeria, I have clients there, but I prefer Kenya. Because in Kenya, when I've been mugged, they will take money and go. I was always taught by my Gujarati clients that just make sure you have some money in wallet. And just take out the wallet, give them that, and they will run away. They are scared, they will not kill you. In Nigeria, they'll take money and kill you. So the beauty is that fiscal deficit will not end.
And how much it is true that China is holding majority of the US bonds in their custody?
They have been reducing and they have been massively buying gold. They are the largest purchaser of gold, and they will continue to do that, and they will attack Taiwan. Last statement is off record. It will impact. There is a big issue, sir, right now. The power of West is getting diminished, and the power in Asia is going up. So that is a very major economic issue. So that's going to have serious implication on financial health of the world market. It's very similar to 20s and 30s. We are behaving like 30s of last 30s. I mean, as you see, the same way will happen. Sir, where did we learn after Spanish flu? And after Omicron, you see, everyone we discussed. I mean, I'm actually telling you, I didn't allow my dad to move out for 2 years. Once my neighbor told me that he walked out for morning walk, I put a ban on him for 10 days and quarantined him. My sister called me. She said, "What are you doing?" I said, "I'm doing this so that he doesn't do it again. Because I know there's no cure, and he's 81. And hand to my heart, he went for a marriage in January of 2022 to attend in India, and he got COVID. Then he had a serious cardiac arrest, and he was on ventilator, 3 operations, and then got sorted later on. Basically, the reality is humans are not learning. The same issue now is happening on the financial side. Same 1920s, same 1930s, exactly same behavior of all these countries in West. So that has a very serious implication on India. Our biggest challenge is sitting on our north side, China.
So I think most of the questions are covered.
Any other question on LRS, on any product or anything, feel free.
Thank you all. Before we move on for the...
Thanks a ton. Thanks a ton for making it today on a Friday evening.
Nice.
Thank you, sir. That's motivation.